Good afternoon, George Cavaligos for HFT Bonds and Notes. Wow, what a crazy day. I mean, market was all over the map more times than I can even remember, all the events that were going on here today. Started selling off as the morning kind of got warmed up with better than expected jobless claims numbers. Hit some support levels, bounced, made new highs in the bonds on the bond auction. And here's something that I pointed out yesterday that I think is very important actually. If you were long at that point, bonds were making new highs right after the better than expected auction, but the 10-year wasn't. At that point I was just like, alright, if you're long, get out of some stuff here. And we had bought some call spreads before the auction. I actually started buying some late yesterday and thought that was a great way to go through the auction process and maybe through the next week or so. And then I saw that I probably should have kicked out some of the long call side of the spread trade, but I wasn't thinking that it was over. The auction was very good. And then we started getting some silly rumor about an article from this Wall Street Journal guy saying that the Fed was going to start tapering QE. Why? We've been through this before. Even if they start talking about tapering QE, we went through that spasm before and the market sold off a little bit, but then everything came right back because we realized you're one bad economic number and they're going to say, oh, we made a mistake, we're not backing away. And they don't know. Look at their history. I remember sitting in the Bear Stearns office and listening to Mr. Bernanke say the mortgage market's fine, and looking around and going, no, it isn't. No, it isn't. But, like most of us, we just got to go with the flow. And we have the luck to be traders. So, we don't have to predict the future. We just have to trade. When we're right, we let them go. When we're wrong, we get out. And it doesn't make you a bad person or anything. It doesn't make you a bad economist. Whatever. Try to be a good trader. That's all we're here for. So, this Hills and Rath article that never showed up and was probably BS. The market sold off hard on it. Bonds and stocks. It was pretty weird. Everything got slammed. There's a little bit of a fly in the ointment now. The dollar went bid on that. The Japanese yen actually was weak early this morning, and I'm not sure if they were the ones that started this rumor or if there's something else going on there. Now, the market has been weak. The Japanese yen's been very weak. It's been going through a consolidation. Why it decided to break today, I'm a technician, guys. I usually don't ask that question. It broke. Highlighted that in the chat early this morning. Actually, that was the best trade of the day. Move on a little bit here. I think tonight, obviously the yen very weak. We could see some further weakness in treasuries because of the yen situation. It's been correlated very tightly lately, where the yen breaks hard, treasuries will go down. I've looked at some stuff here and I'm getting some levels down below the market, that 146.08 area on the bonds and 132.19 on the 10-year, which are just above the old lows here. And again, like I said yesterday, there's still this chance, and I don't want to, erase this possibility because I don't have a great count on the market right now. If we do make a lower low, I won't be bottom fishing unless they can flip back above the old low. So, bonds break 146 even, go down a little bit more, run some stops, and then come back above 146 even. Then I'll look at that as a buy signal, and I'll get long, and I'll put a stop just below the previous low there, whatever it is. And the similar situation in the 10-year, 132.17. We had that little double bottom on the short-term charts. If we take that out by a little bit, got some kind of old fib levels at 132.15. Maybe we go down a little bit, hit some stops, and then come back. It's kind of something to keep in the back of your mind. Interesting thing is, lately, the Asian session, we've seen buyers of bonds. And then in the London session, except for this morning, we have seen some sellers. Hedge funds are very long the bond market. Makes me a little nervous. They've been very wrong lately. And I think if we do break, those guys will be forced to sell some more. So I want to be cautious. I'm a little bit friendly here, but I'm also wanting to be flexible. Okay? It's bottom line. Flexibility, always, as a trader, right? Okay, Blackhawks tonight. Let's finish this thing up. And please stop the 8:30 Central Time start for the Blackhawk games. It's stupid. Dying here. Can't get any sleep. Have a great night, everybody.